being priced into a rate hike now being priced into December of 2026. One other thing I'd like to mention here before getting into our leading indicators is that our little regime tracker was streaking over into the boom for really the last 2 weeks. Remember that bear trap that we were looking at on that Monday, Tuesday, 2 weeks ago? And we had the anticipation of the VIX falling back into its pullback from its old contract lows to highs. At least that was the least that it could do. And that if it didn't stop there, that the indices would keep on going, right? We came off of that edge, and this was June 29th. June 1st, we took a run back up into the inflationary boom. It came off the bottom of this regime tracker. And then since it's been backtracking. So that is interesting. When you're looking at dollar correlations, the dollar correlations are in neutral on the indices. But one thing that's interesting as well is that when you're looking at this from the perspective of energy, the energy markets rallying into their profit targets last night were correlated with the indices pulling back into their support. And the question that we're asking here as we're going into our morning is, does this VIX weakness and crude oil weakness trade send the indices into another squeeze off of support into a continuation of this kind of grind higher, this rally? And let's zoom out here to the VIX here for a moment. So the VIX broke through its line in the sand by one tick. And then it's in its very first 50% short from highs to lows. And so this is the equivalent of the indices coming into their halfway back long from lows of the week to highs of the week. So the VIX is trading its 50 from our highs of the week to lows of the week. And where are the indices right now? Well, the indices, specifically the ES, is sitting right on top of its halfway back long from lows of the week to highs of the week. This is also the 20 handle. In fact, the low, the 20 handle is the 0375. Our low is the 0375. Why is that price significant? Because the gap fill stats show us over the last 180 days that there's around a 73% probability to fill a gap inside of that 20 handle at 9:30 a.m. Eastern Standard Time. And if we're outside of it, there's only a 52. So that's the difference between having an edge and just being a coin flip. We don't care about the coin flips. We want edges. And does the rest of the market perceive that the same way? I mean, it's debatable, but we have a pretty interesting reactions at the 20 handle. Look at yesterday. 20 handle the gap fill from above, and then 20 handle to the gap fill from below. We already ran into the 20 handle to the gap fill during Asia, and then that was our high. And then we've fallen into it again. So, we have a very kind of slow grinding market. It's been an interesting last couple of days. It does feel like the summer. When you're looking at this from the perspective of a little bit larger time frame, it's a very concerning looking high up here. And we ran right into the top of the range yesterday at the 11:30 reversal period. Have we breached that high yet? No, we haven't. But we also haven't broken through a long setup or pierced through the VIX's shorts. In fact, just the opposite. The VIX is confirmed. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.